This is your monthly Kansas City market report. We're going to I'm going to give a two-part report today. We're going to talk about what what did the inflation report say? What's that expected to do for interest rates going forward? Secondly, we're going to go over the Kansas City numbers, houses sold, are we up, down, the prices, that sort of thing. I'm going to try to do this in a real quick time frame. Starting off with the inflation data report for November, looking good right now. I'm pulling my numbers right now from New York Times report. This is a point from the consumer price index report that came out this morning talking about inflation. In general, the word on inflation is it's still kind of holding steady. It's no longer continuing to rise from what they say that peak was in June, to now it's starting to cool down a little bit, which is good. They're expecting the overall expectation is that it rose just a little bit to 3.1, but that was actually better than expected. So they're not expecting the Fed to later on today to raise interest rates based off these numbers. They figure they'll leave them where they're at, the federal interest rates, that is. So this will probably be good for interest rates, I would expect, and we probably will see a little bit of a drop on interest rates. But talk to your local mortgage lender, to get more information on that. So going on to the second report is our Heartland MLS. This is from our Kansas City Regional Association of Realtors. They put out the numbers for the Kansas City Metro right now, and I will go over those numbers for you right now. The number of houses that have sold in November versus last year is down nearly 10%. We're selling fewer homes. It was a heavy sellers market last year. Interest rates were lower last year, which led to more homes being sold. But the average home prices are still up 10%. So you're like, well, that doesn't make sense, Eric. What are you saying? Why would that happen? Well, I'll tell you why that's happening. In general, we have fewer homes being sold. We have fewer homes going on the market because of where interest rates are. A lot of homeowners are sitting with 2, 3, 4, and 5% interest rates. They're not looking to sell and go and buy at 7%, 7 or 8% interest rate. So that has cooled that down. Now, as interest rates are coming down, we may see a lot more homes starting to hit the market. You're also going to see a lot of homeowners who've been sitting, waiting, hoping that maybe the interest rates would come down to even 4 and 5%. Some of those are going to stop waiting, and they're going to, because there's a lot of people who have other reasons to sell. So I expect we're actually going to see an increase, which should at some point start seeing the prices come down. I think next year they're actually projecting a moderate price, not a big drop. So anybody that's talking about like housing crash, nobody knows that for sure. But right now, all the experts are projecting for the next year just a moderate drop of home prices by like 1%, not hardly anything. The median sell price, which is a little bit different than the average sales price, is up 7.3%. Days on market are about the same. It says it's up 15.6%, so I guess it's up a little bit. They Last year their homes were on the market for an average of 32 days. This year it looks like they're on the market for an average of 37 days. The percent of price versus list price, meaning that we list at 100,000, it sells at 97,000. Obviously 100,000 house isn't really kind of hard to come by, so maybe I should update my numbers. 300,000 sold for 280 kind of thing. But the right now the numbers are pretty similar to last year. They're 90s. It's selling at 97.1%, just a little bit below asking on average. There's still a lot of homes. I can tell you there's still homes that are selling above asking. But there's a lot of homes also selling below asking, getting closing costs covered, seller concessions for repairs. These sorts of things are a little bit more common this year than they were last year. The pending sales are up a little bit, actually, at 1.3%. Inventory is at a is down. First last year we 7.5%. Days months supply of inventory. Last year we were always this is we've just now kind of gotten in that over 2 months supply of inventory. This is huge. We were last year most of the year kind of fluctuating at 1.5 months supply, 1.6 months supply. Last year said this time he said we were at a 1.9. This year we're at a 2.1 month supply of inventory. Now we'd like to, if you want to see home prices come down, you're going to want to see that keep going up a little bit to get what they say a legitimate buyer's market is right at 6%. So um, that's our numbers right now. Home prices are still up because a lot of home sellers are not joining the market right now. But market numbers are what they are. We should start maybe seeing a little bit of interest rates. Really kind of depends on what interest rates do as well. Um, Consumer price index report was good. Don't expect that to hurt us with the Fed. Um, Home prices are still good. The supply supply is down is the only thing. So hope this information helped you. It's still a good time to buy a house as interest rates start coming down. I don't expect next year. They say you really aren't going to see a big drop probably until the end of next year. Interest rates will probably kind of stay flat, kind of fluctuate in that upper fives to lower low mid sevens. I expect. I'm again, don't quote me, through the summer time frame, and they're talking about fourth quarter next year. Interest rates may be seeing a drop. So if you're looking to buy or sell a house, I'd love to talk to you about that. I'm always going to have an honest conversation with you, see if it's really the best fit for you. Give me a call, 501-712-6777. Thanks. Talk to you later. Bye.